Peace, love, and happiness, beautiful people. I am Oyabiyi, everybody calls me B, and you are tuning in to an episode of Real Estate with B, where I discuss industry topics to help get you into your new family home. And who knows, maybe even invest someday. This is the first episode of the Lenders Table, and I'm super excited about the guest that I have on for us today. The Lenders Table is pretty much where I bring on lenders to talk about their different products, as well as educate us on what it takes to actually get to the lending table, and more importantly, to close. But first, if this is your first time to the channel, I need you to hit the like, subscribe, and the share button. I want to continue to get this information out to you and continue building with you, and it's really important that we get this information out to everyone because I believe that everyone deserves home ownership. But first, a little bit of background. This gentleman, he actually reached out to me last year on LinkedIn, and he, the typical, hi, how are you doing? I see that we're working in the same industry. Would you like to talk, and chat about each other's businesses? And I'm like, okay, sure. Why not? Let's talk. I mean, it's your typical LinkedIn DM, right? But what was different about him was the fact that he actually pushed for a meet and greet. And let me tell you, this is how you build relationships. So if anything, push for a meet and greet if you're going to try to build businesses with somebody else. So when I meet him at the local coffee shop, because his office is around where my office is as well, we met at the local coffee shop. And what struck me as really different about Nathan was the fact that he led the conversation with, so how are you? Who are you? How can I help you? And that was very different because most people just go into their products and so forth and push this out and push that out. But no, he actually genuinely started off with a person-to-person conversation, which made me start to think, if he's starting off like this with me, I can only imagine what he's doing with his actual clients that are sitting at the table with him. So if he's that personable, oh my goodness, yes. So it wasn't until I actually started asking him questions about himself, getting to know him as well and his business, that he just started to pour the knowledge out. And when I say pour the knowledge out, I just learned so many things just from a 45-minute conversation and tea with him. And I wanted to invite him onto the show, Real Estate with B, to actually pour into you guys as well to help demystify some of the things that we see at the lenders table and just in the industry in general from the financial aspect. So without further ado, I'd like to introduce Nathan Jennison of Mortgage Architects. How are you?
I'm really well. How are you?
I'm doing fantastic. I'm so glad that you decided to join me today.
I feel honored. Thanks for having me.
I'm so excited because you are the first lender to the lenders table.
That is awesome. I'm completely honored. So.
So let me ask you this. I always start my interview questions with asking individuals who they are and what they do.
Yes. Well, my name is Nathan, and I am the owner of the Mortgage Architects. I'm also owner of another company called Independent Mortgage Brokers, and that is a company that holds a portfolio of lenders and also provides a platform for other loan originators to have their own businesses and basically do what I do. So I'm really excited about it, but I could go on. The reality is, if you boil it down, I'm an independent mortgage broker, which means that I help bring customers and lenders together in a way that is very beneficial for the customer. It usually saves, on average, about $8,000 to $9,000 between closing costs and interest savings overall.
That's pretty impressive. Clearly a mortgage architect, correct?
Yeah, true.
So, okay, what is one of the benefits of being more independent versus going with a bigger brand like Chase or something like that?
That's a great question. I'm really glad you asked that, actually. So, when you work at Chase and you're a loan originator there, you can sell Chase products. So, whatever it is that Chase is doing at that moment is what you have to work with. And what most people don't realize is that lenders are essentially pricing and managing their own pipeline. So it's kind of what goes on behind the scenes. So if a lender needs to get more business in and they want to be more aggressive or they want to capture more market share, they will price more aggressively. So they're going to have lower rates, and then the cost of those rates is going to be cleaner. It's going to be more in favor of the customer. What happens is that their pipeline is full, and if they need to slow things down, then they're going less aggressive on pricing. So, or depending on what their strategy is. So when you work for one, you're stuck with whatever it is, wherever they're at in that cycle. And as a customer, you usually don't know where they're at in that cycle. So you come in, you just get what you get. With an independent broker who has a lot of lenders, we're also on the wholesale side, which I can come back to that. But on the wholesale side, like I have 20 different lenders, which means that regardless of whatever a lender is doing and where they're at in their own business, I always have lenders that are at the best, like the top best in pricing or nearly there. And I have multiples to choose from for ones that are, best fit the customer in their situation.
Awesome. So that is very useful because I know I tell a lot of my clients it's okay to go ahead and go with an independent mortgage broker, or it's even okay to get more than one pre-approval just because you want to shop just like you're shopping for a home for your best rates to get the best terms for you and your family.
Yeah, I would say in general that is true. I definitely would say, especially if you're only dealing with one bank, then absolutely shop around for sure. I think who you're shopping from is really important as well, because it's kind of like if you're going to get construction on your home, you want to kind of get a range and you don't necessarily always want to take the cheapest, because what you get for that can be really problematic. It can make your life miserable.
That is true. As someone who has been in the renovation world for quite some time, I always tell my clients it's not necessarily that you want to go with the cheapest guy, because you're going to get very cheap results most of the time. So they have to keep coming back, and next thing you know, things are just going all awry, and it's very frustrating. Like, if you go with, just take your quotes, go with the middle tier, the higher tier, just do it right and don't try to skip out on it.
Yeah. Oh, and anytime that you're dealing with anything in the financial industry, people's character is amazingly important. And also whether or not they're more focused on their benefit as far as like, hey, I want to make money. People who are more focused on that versus what's actually the best interest of the customer makes a massive difference in the outcome as well.
So that was actually one of the things that stood out to me about you, is how personable and how much you care about your client. Even when you just approach me and just ask me like, hey, who are you and what do you do and how can I help you? And that to me was like refreshing. It was different because most people are just, this is my product, this is what I offer. Do you have anything? I'm like, hold on, did we know each other yet? Like, warm me up a little bit. So I know you actually pull that out and go into and do that into your deals as well. So like, what is one of the most challenging deal that you had to push through that you end up feeling like so satisfied, like they wouldn't have gotten that service with anyone else except for Nathan?
Well, I can actually just talk about a deal that we just closed on the 31st, and
congrats.
Thank you. It was a long process. So I first started working with this couple. They were looking to move from a home into another one. They were kind of upgrading, and family had grown, and it was complex because they had their own business. So self-employed, which is always a little interesting, but then there were some credit issues, and then usually with self-employed borrowers, if the business hasn't been around for a long period of time, then we have to use 2 years of tax returns, and with the credit not being great, then we end up in a FHA loan in which we're going to be using 2 years of tax returns. So there's all of this stuff happening, but we couldn't use 2 years of tax returns because it was impacted by COVID the year before and we didn't have enough income. So we basically didn't qualify for a conventional loan because our credit was below that. At the same time, we could get to 20% down, so if we could get the down payment, then we could actually make this loan work, but we had to increase credit. And we basically had to thread this needle from the very beginning. So it had involved credit repair, it involved really tricky ratios to get everything to approve. It involved a HELOC from a family member with gift funds. And we couldn't just give an approval and say, hey, you're approved, go for it. We had to do credit repair, and we had to time when we were going to do credit pulls to be able to say, hey, we can actually do this. Meanwhile, they got under contract with $18,000 in seller concessions, which is massive.
Wow.
Yeah. And so we just kept working this deal from every different angle, and we cleared obstacle after obstacle after obstacle, and we had minor meltdowns with like, because it's a stressful process, especially when we don't know it. My house is under contract, I'm gonna sell it, but I'm trying to move to this other one. Is it gonna actually work? Are my kids gonna be homeless? And so being in that whole process and being able to keep everybody grounded, and everybody knowing what was going on, what the challenges were, and working with the lender through everything, we got to a close. And it almost brings tears to my eyes, the impact of it, of helping somebody make that transition, and the impact on that family is phenomenal. I was texting them this morning just to see how they're enjoying the house, and it's great. It's why I love doing what I do. So.
That is very phenomenal, and it is a very stressful process. I have to counsel my clients all the time. They call us also mini counselors as realtors, and that's even awesome to know that you as a lender also pick up the phone and say hey, no, everything's gonna be all right, because you don't see that too often, I feel like. So that actually helps when the person who's packaging the money is actually on the phone with you as well, and letting you know no, we're gonna get this done. My team has it. We're gonna make sure everything is in timely order so that you get your family into a new home. That's awesome.
It's interesting because I meet with a lot of realtors and talk with them, and the number one thing that they say that they just can't stand about the lenders that they're working with is they can't reach them. The realtor who has a deal, who needs to get a pre-approval letter, and they can't reach the lender for days. And if the realtor who's bringing the business to the lender can't reach them for days, what does that say about how the customer's gonna what's the experience the customer's gonna be in being able to reach that person? So the anxiety that is produced of the not knowing what's happening and not having somebody respond to you when you have a question is amplified. I mean, it's crazy. And I will never have my customers in that situation, or the people that I work with in that situation.
Beautiful, beautiful. Because I can't tell you how many times I've had to switch out in the middle of a deal.
Yeah.
Nobody answered the phone to answer one simple document that the client didn't understand. And I, as a realtor, I have to stay in my lane. I can't do your job. I have to do my job.
Yeah.
So no, that's very refreshing for sure.
Yeah.
So speaking of entrepreneurs and so forth, just getting prepared in general for purchasing a home, what are some of the 3 biggest mistakes that you see potential home buyers run into that they cause themselves, that they can actually be more cognizant of as they're getting prepared to approach a lender hey, these are my documents, how can I get a pre-approved, and how much am I pre-approved for?
I kind of like to split that out a little bit because entrepreneurs have another different aspect of it that I want to touch on. It's really important. But in general, what I would say is mistakes that most first-time home buyers especially are going to make is they want to save too much for their down payment. So the idea is out there that I need 20% down. And it's fascinating because essentially what it boils down to when you ask about it is nobody wants to pay mortgage insurance. And I don't like paying insurance either. But what they don't understand necessarily is that you're talking about a home that is multiple hundred thousands of dollars. So just to think about it, if you have a $400,000 home, just to make the number simple, and you have an average appreciation of 5%, the home, as when you start saving to when you're actually going to try to buy this home in a year, it means if you want to just be at the dead zero where you started, you need to save $20,000, which is hard for any family to do. So $20,000 and you haven't gained ground. So the home is continuing to move away from you while you try to save this down payment. So most people don't realize they're going to need 3% down for a conventional loan or 3.5% down for an FHA. That's the down payment, and then you have some closing costs, and there's other ways that can be handled. But that's crucial. If you're trying to outsave the home, it's a losing battle, and you're missing opportunity. So
It essentially, because I know I ran into that trap myself. Like, okay, I have to save this much. I have to save this much in order to get this pre-approval that I want, or to even make sure that I can get to the finish line and ultimately the closing table.
Yeah.
And what you're saying is a lot of times we get trapped in that mindset is because we're trying to avoid an extra payment of the mortgage insurance.
Yeah.
When really, if we just shoot for the 3% and just let the market do what it does in terms of appreciation and so forth, which is always steady for the most part.
Right.
We can relax a little bit and just go talk to our lender with what we have to start, essentially.
Right. Well, and it's also interesting when you look at how much you're spending on mortgage insurance. So for most people, it's like, all right, let's just say $250, right? So $250 over the lifetime of a year is $3,000 thereabouts, right? Or maybe my math's not right. But when you talk about $3,000 versus I need to save $20,000 to be in the exact same spot where I was a year ago, so I have to get way more than that just to like it's a losing proposition, and you already have lost $17,000 in that process.
And a lot of time, and then you're outpriced again.
Yeah.
Going back to I need another $5,000.
Not to mention what did you just spend on rent?
Exactly. So now you just pretty much shot yourself in the foot.
Right. And this is the mistake that so many people are making as they just don't know. And that's why I value having these conversations and getting the word out more, is because people they need to have somebody showing them how to get into a home from the beginning. So
absolutely. So circle back around to the entrepreneurs. You say you wanted to dive a little bit more into that.
Yeah, so it's really, really key. One of the great things about being an entrepreneur is that you have a business, you have your income that comes in, and you have business expenses. And entrepreneurs, one of the things about them is they hate to pay taxes, right? And being an entrepreneur, you can write off your business expenses, and there's a lot of flexibility in that. So a lot of times, there's not much income that's left over that is actually claimed on a tax return. And then we also love to use certified public accountants, or CPAs. And what makes a good CPA is that they know how to make it so that we didn't make any money and don't have to pay taxes. And there's all kinds of ways in which they do that. That's why we use them, and that's one of the reasons, like that's what sets them apart. Is like, this one's really good. This one really found all of the ways that I could really maximize my tax savings. And then we go buy a house. And what people don't realize is that entrepreneurs, your income doesn't exist until it's on a tax return. And when it's on a tax return, we go through a worksheet and we get to the end of it and we basically say, well, you made $20,000 last year. You obviously are really good. You have a thriving business, but you don't have enough income to get a loan to purchase this house. And so now this entrepreneur who's very successful is not able to buy a house, and now has to wait for another year, maybe 2 years to be able to make it work. So planning ahead is key. Having conversations with a knowledgeable independent mortgage broker that's going to be able to help kind of shepherd that process along a little bit, of saying, hey, these are the things that you need to make sure you are aware of. There's things on tax returns that can be added back in. Depreciation is one of them. Also mileage, another one. There's like some very specific things that will actually add income to it while also saving you on taxes. So it's definitely something that I wish CPAs knew more about, and it's definitely something that I feel like entrepreneurs, they need to know that there's a lead in to what they can actually purchase.
I even think, because we had this conversation recently with me going back and filing my taxes and so forth, and I went and I talked with the tax consultant, and one of the first things I told her is like, hey, me and my mom, we're looking to get pre-approved. So these are my businesses.
Yeah.
This is like, whatever you do, I need you to be in the forefront of your mind that I'm looking to get pre-approved. So she immediately started saying, okay, so we're not going to write everything off. We're going to do this, we're going to do that. I need to add back in your mileage. What else did you I'm like, okay,
yeah,
you know what you're talking about.
Right.
But I think it was also imperative that I started that conversation, and she asked me, she said, okay, you have these businesses, what are you looking to do as well? And I said, well, looking to purchase buildings. So I need you to set me up in a way so I can go back to my lender, and he looks at my documents and say, okay, now we have something we're cooking with. We can now go into the market and start searching for something that suits our needs. So
that is what makes a phenomenal CPA, is because it's somebody that actually is asking that question about what your goals are and what you're looking to do, and then supporting that process in the way that they work your taxes. And that's, essentially as a independent mortgage lender, like I am working as a team sometimes with CPAs because I have to get documents from them. They're getting, and like we're trying to make everything work for the customer and doing it in a way that's completely legal. Like that's always the case, right? We're not cooking documents. We're not like, there's not a, some like magic, we're going to check all these boxes and fool Uncle Sam. No, we're going to pay taxes. We're actually going to pay more taxes because of this. And in the end, everybody wins. You get the house, their CPA just did a phenomenal job, he gets paid, and the Uncle Sam got more money. And that's, what we want in the end. Uncle Sam cares about small business because that's part of what keeps our country going. And we also need to, have home ownership. It makes our communities better.
Absolutely. And a lot of entrepreneurs don't realize that, okay, we don't like to give up any of our money. I get it. However, there are incentives from Congress in place so that you can file your taxes appropriately, that give you credits and breaks and so forth,
right,
that actually does wonders for your business in the long run. Right. If you actually really sit down and think about it. But I know we're so much like, well, this is my money and I want to keep it. And it's like, do you want to do things right, or do you just want to stay where you are?
Right, yeah. And I think that, in general, the more that we can be a little more open-handed with our resources and with the way that we approach things and the way we approach things with each other, and business deals can actually help us move through life a little more seamlessly. And also comes into play when we're trying to purchase a house. So
it makes it so much easier.
Yeah.
Okay, perfect. So let's talk a little bit about the market.
Yes.
This is everybody's favorite topic. Realtors are scared. Realtors are excited. Everybody's saying it's coming up. Everybody's saying it's going down.
Yeah.
Everybody has their own opinion, but it's really the data that drives the market. It's really the data that drives the economics of this whole country. So regardless of opinions, I know you're a data-driven guy. So let's talk about the market a bit and what you're seeing from a financial standpoint as a lender.
Yeah, I think that's huge. And everybody's looking at data, and it really comes down to what data are they looking at and what are they comparing it to. Baselines matter. When you have, in any situation, when you have anomalies that are at the far end of a spectrum, you typically want to exclude them. So 2020, 2021, those were anomaly years. They were absolutely crazy. And so all of 2022, all that we heard were all of these articles and news headlines that were comparing 2022 to the prior 2 years. But they don't compare. Like, you can't do that. It's so far from the baseline. So when you compare 2022 to 2018, 2019, etc., then you end up with a little bit of a different picture. Everybody was expecting that we were going to have a 20-30% collapse because we had such a huge run-up. And that hasn't happened, and everybody's kind of confused as to why. The interesting thing is that if you go to the St. Louis Fed and you look at vacancies in the U.S., which is the number of homes that don't have people in them, and you look at the percentages, you will see a large run-up going into 2007, 2009, that housing crash. So we had a ton of builders delivering product to the nation, and people were buying it up, but they didn't actually have people living in them. And so when you have an underlying foundation of bad loans that were being made, and then you have a whole excess of supply, that is a recipe for disaster. That's a bubble. Now, if you look at vacancies on the back end of that, you see this continual decline. And what's happening is that since 2010, builders have not kept up with what's called the new housing formation. So every time a new family or a household is created, there needs to be somewhere for them to live. And so we have gradually brought that vacancy rate down to where now it's at historic lows. It's under 1%. So in 2020, Freddie Mac released a post that said that we were about 3.2 million homes short in the U.S. Redfin upped that to 5.24 million back in 2021, 2022. And essentially what we're looking at is a massive housing shortage. Most people have not really understood that as of yet. But the reality is, even with inventory since August, has been falling. Right now, if you're trying to find a house that's not already under contract, there's less than 2 months of supply out there. Now what's happening is we also have 6 to 8 months of borrowers, of people who wanted to buy a house that have been sitting on the sidelines because they were too scared because of all the hype. They thought that there's going to be a 20-30% collapse. They don't want to buy now. Or they were priced out of the market because of high interest rates. Now interest rates have fallen about a percentage point since November. We're in a normal appreciation cycle of real estate. It tends to grow during the spring, early midsummer, because everybody wants to buy it before the start of the school year, and it falls on the backside. So we're entering a spot where we're going to have a whole lot of people chasing a few homes. And on top of it, you have about 50% of American homeowners who have interest rates in 2s and 3s. They're not selling. So we don't have the normal turnover and upgrading of homes that we would usually have. So we have a very complex issue that is opening up, and we don't have an easy way of fixing it.
No, there's not an easy way to fix that. Because even as a realtor who works with a lot of developers or a lot of first-time investors in the market that even want to fix and flip or anything like that, I always try to encourage them to try to come together as a group, joint venture, see if you can get more money on the table, because we definitely need new housing developed. Like even in Chicago alone, we have so many lots that are vacant that the city is just trying to give away.
Sure.
But it's not really able to, because nobody is in the best financial position to actually move forward together. Everybody wants to do everything alone, so you end up just having one-offs here, and there, like you said, not lasting too long in the market. Just even myself alone, just holding open houses at the beginning of this year, people were circling back around and said, well, how long have you been looking for? Well, I've been looking for 2 years. I'm like, girl, why are you still looking? Like, well, we were under contract and you know, it just didn't work out. The deal had just fell through and I just stopped or whatever. And I'm like, well, first of all, the rate is not going to go back to what you're looking for. That was, like, as you said, was an anomaly. So they were just doing that so they can get people outside and shopping. Second of all, you should still try to purchase now, because whatever happens, you can restructure it later. And a lot of people don't understand that they hurt themselves by sitting on the sideline for too long, for a number of reasons that you mentioned, from just trying to save too much at one time and pricing yourself out of the market eventually, for waiting for interest rates to go back down, for waiting for developers to magically build these new developments that they're probably going to be outpriced of, because that's how much it costs to develop in America, to be honest. I just don't understand, or I try to counsel my clients not to wait too long, because find something that you can get your family, your home in, your home. Find something that you can get your family in today, because one, you're still growing, you're still giving your money to your landlord, so you're losing there, and two, you're going to build equity in your property, because the market is always going to appreciate, especially once we get the housing development under control and start bustling that up some more. Your property values are going to go up even more, essentially. But a lot of people just get so fearful because they're so stuck in, well, I want to pay this a month. Okay, darling, we can pay that a month. But also understand that you're going to want to upgrade your home in the next 5 years. You're either going to renovate it to upgrade it, or you're going to just put it on the market, take that money out, and go get you a new home and probably another neighborhood for high school or whatever for your children as they're growing. So a lot of people miss that connection a lot of times, and I feel like that's why they stay on the sidelines for so long. And it really is doing themselves a disservice, because you can always restructure a loan later on down the line with different products that you may have, or anything that they may see that they can take advantage of at that time.
I mean, there's so many great things you just said. It's like hard to know what to respond to. There's kind of an adage of like marry the house and date the rate. Like, you know, it's kind of, right now especially, people are looking at the wrong thing. Everybody's looking at interest rate. Like, I'm going to wait until interest rates get lower. Well, okay, but so is everybody else. So when you look at supply and demand, what happens in that sort of situation is you're going to be shopping at the height of demand with very low supply. So that means that you're going to be spending over listing price, because you're competing against other offers, and the chances that your offer is going to win, it gets a little more dicey, right?
It does.
But if you're buying when there's less demand, such as like right now, then what happens is you get lower purchase prices. Like, you can actually buy a house for less than listing if it's been on the market for a little bit. And not only that, but when there's not very many buyers walking through a house, then the sellers are nervous. And so when there is somebody making an offer, they're a lot more willing to add things like a seller concession, which can lower closing costs. And so that is why a lot of my recent customers have had $10,000 to $18,000 of seller concessions, which makes it so much easier for them to get into the house. And when you look at the difference between the deal that they got today versus what we're looking at in possibly 2 to 4 months from now, when everybody's out trying to grab a house, the difference in price on that could be $20,000, $40,000, $60,000 depending on the deal. And you know how long it would take you to save $20,000, $40,000, $60,000 on interest savings?
On your regular job?
Yeah, exactly, right? So it's massive. It's massively important that people buy when they can get into it, and then basically build that equity over time. Like, it's not about timing the market. It's really about, hey, when can I actually make this happen? And is it possible for me to do it before the rest of society is trying to do it all at once?
A lot of people go off the news, and a lot of people go off what their friends are saying.
Yeah.
And that's what professionals are for.
Yes.
Like, and I understand a lot of people, they're just telling you that just so they can get you in a home. Like, honestly, no. Like, you want to start where you are.
Yeah.
Because if you wait too long, you're going to keep trying to catch up. And I find that a lot, especially on the South Side, too. And it's frustrating as a realtor because I want to help you, but sometimes clients get in their own head in their own way.
You know, and that's a really great point. And it's one of the things that ties in with one of the questions you asked earlier about mistakes that, you know, people make when they're trying to buy a house. And one of the ones that they make is that not all professionals are the same, right? Mm-hmm. So often when I ask about how people found a realtor, it's, well, my mom knew this person who lives down the street. And you know, that person might be amazing. It might be the best realtor ever who happened to live down the street and is like, things are happening, right? But what I'm finding to be more important than anything else is somebody who is going to be essentially like a really good doctor, who is going to be really direct about, this is what I'm seeing. This is the financial health that you're in. Here's the upsides and downsides of this situation. I'm working with people all the time who got into loans where the lender never told them the downsides of it. They never really told them what they were getting into. And that has in some cases, a massively negative impact on that customer for many, many years. So that's one of the things that I will work with people. I will tell people, you know what, in this situation, I would love to do your loan, but you have this solution over here that's going to cost you $500 or $700. That is going to fix everything that you're looking to do, and I'm not going to make anything on it. But this is what's best for you. So this is what you should do. And I mean, I literally had one of my friends like finally called me up and he's like, hey, I'm trying to take some money out to help my son. And I was talking with this really big lender company that everybody knows. And they were like, yeah, we can get that for you. It'll just be $100,000 cash out refi. He's like, I'm trying to get $10,000. They're like, well, this is what you do. And I looked at him and I said, you gotta be kidding me. Like, you just need a HELOC. It'll cost you $500 or $700. That person over there, they're trying to get a commission out of you. Mm. And the commission, like all total loan cost, was going to be almost as much as he wanted to take out of his house to begin with. By the way, he owned his house outright. Yeah. So it's like that sort of situation upsets me so much because there's a whole industry of people that are essentially looking out for their own best interest as opposed to the customer. Who you work with and how they approach that situation and how direct they are about telling you the news you sometimes don't want to hear, like that's the person that you want to use, regardless of who knows who.
Yeah, I like how you touched on that and you compared it to a doctor because your doctor isn't going to fluff you. If you need this medication, take this medication so that we can have a longer, healthier life. Right. If you listen to your professional who is actually giving sound advice and not going left when you're telling them directly what you want, like that's just outrageous. Like, I'm asking you for 10 and you're trying to give me 100.
Yeah.
Did you miss the conversation that we had?
Yeah.
So it's just, I do find that a lot, not as much with realtors. I just find realtors aren't as knowledgeable. So I really encourage realtors to get in front of lenders and speak with you guys and understand the market and so forth so you can counsel your client as well. I know I spent like countless nice years studying the market of Chicago just so I can be knowledgeable about what's going on, where to, you know, help people understand what's going on in different markets in Chicago, because every community is its own little thing essentially. But also knowing what they're trying to accomplish and who are some of the professionals that can help them accomplish that the best way. Because there are lots of times where people, I don't know, like let's just say I need to maybe fix up my home. Well, okay, you may can try this type of renovation loan, or try a different type of loan, pull some money out, put those upgrades into your home if you're planning on staying, or you can just go ahead and sell altogether. All realtors are gonna go, sell your home.
Right, yeah, exactly.
But to me, it's like it may not be that advantageous for you, because I honestly believe keep your home, because once you upgrade into the next home, you can always rent this home out and have extra income for the family. Or even if you don't want to rent it out and just have a family member stay there because they may have came down on hard times, or that's what the home is for.
Right.
It's to cherish those memories and to protect us and to keep our families with a shelter over our heads. And a lot of people, they just, I don't know, they cut it and then they go on to the next one, or they try to convince you to do something that's not in your best interest, and that's just so predatory. And it is one of the pet peeves I have in the industry, which is another reason I'm like, okay, let's get this information out to you guys properly, because maybe you won't look at me at a free conference or whatever, but if you're just scrolling, here's this information for you. Please utilize it so that you and your family can get in the best position and contact us.
Yeah, exactly. Well, it's one of the things that when I met you that I like really stood out to me was you were talking about this in terms of what you do with customers when you're out looking at homes with them. And a lot of realtors are just trying to make it like they're trying to make a sale, right? So, hey, you let us home, great, let's get it, let's make an offer. And one of the things that stood out to me is you're really in tune with what the customer is actually trying to do. What's the end goal?
All right, guys, that was a lot that we just unpacked here. And I definitely have to invite you out again, because that was just skimming the surface. But I do want to say that if you are looking to reach out to Nathan Jennison, Mortgage Architects, he did leave his contact information. I'll make sure that I link it below in the description, as well as post it on this video as well when it's posted on the out into the multiverse, I suppose. If you did see any value within the content that you have gotten here today, feel free to go ahead to like, share, and subscribe, just so you can have this content continuously delivered to you without even having to guess about it. Because I know so many of us are looking to press towards that home ownership, but we're just so oversaturated with information that is not really necessarily making sense. So that's what I'm here for. Once again, you were listening to Real Estate with Me podcast. Thank you so much for joining us. And if you have any questions, you know where to find me. I'm always reachable on Instagram at Real Estate with Me, and on my website, www.realestatewithme.com. Don't know why I did the W's, but it's okay. As well as TikTok, Real Estate with Me. So, without further ado, I'm going to let you guys have your day, the rest of your time. Thank you.